Hey, what is up, everybody? Welcome back to the next video. This may be the last video. We'll take a look. But this is the M1 Finance for Beginners / Advanced tutorial for the online broker M1 Finance. My name is Dave, and today we are looking at the Research tab. If you go ahead and open up your M1 Finance, either online or on the mobile app, you log in, and up here at the very top you will see Research. Go ahead and click on that for me. You didn't see what was up there before at the beginning of the video. I swear, I was always at the main dashboard. I promise, teacher. So let's click on Research. I was getting ahead of myself as the student / teacher ish. I'm sorry, I have a dry humor. It's from the dry coffee that's cold. I need a microwave. Coffee. It's the nectar of life. Research. Market news. The news. It's all news. Upbeat earnings. Recovery optimism. Lifts Wall Street futures. What? Futures? Huh? Recovery? I don't know. I don't care. I don't care about the market. It can go up, it can go down. I'm an investor. I'm not a trader. But I do trade. I buy. When the market goes down, I buy. I only need to see red, and it's a Cyber Monday. Because Mondays are the days we buy. I buy. I'm not a financial advisor. You might choose Tuesday or Wednesday. Friday. I hope you don't choose Friday, but if you do, you do. So anyways, let's be a little bit serious here. Investing is a serious topic. Super serious. It's the most serious. The very first thing we will see when we click on the Research tab is Market News. On the left-hand side, we will see the change in the markets. These are the exchange-traded funds, or ETFs, that track the different markets. The S&P 500, that's SPY. DIA, that's the Dow Jones, and you can see it tracks Dow Jones. Flat, a little bit of gain on the NASDAQ. NASDAQ is, for the most part, 99% tech. There are some non-tech, what I consider to be non-tech stocks on the NASDAQ, but it is what it is. You can see if they're up or down. Monday, this was all red, like 2%, 4%. Today's Wednesday, they're up less than 1%. If you do follow the news, or if you do hear about it, oh no, the Dow Jones was down 4 points. Well, the Dow Jones today is up 0.67 points. Why they say points and not, hey, it's down 4% or it's up 0.67%? I don't know. They're using lingo. Financial people using financial lingo? Why would they do such a thing, right? Points are percentages. Percentages are points. There. Tutorial done. Just kidding. This is the market news. What we as investors are worried about, if you use M1 Finance, we are worried about individual stocks or individual funds. The reason why I say that we are worried about it is because if you use M1 Finance and you are probably not a money manager through like JP Morgan or anything else, something like that. So that's the reason why we're worried about individual stocks. So in my previous examples, I've used Verizon, and I'll go ahead and use Verizon once again. No, actually, let's change it up. Let's do a random healthcare. I'm not going to do healthcare. Let's stay away from politicizing this video. Consumer goods. That's still kind of polarizing. What could be interesting? Okay, Duke Energy. So that's DUK, Duke Energy. Activity, research, Duke Energy. Alright, so once we're on the research tab, we can click up here to search Duke Energy. There's also a Duke Realty. Who would have thought? Or let's say you're looking into a specific company that you want to do a little, see what's happening in the news, do a little bit of research before you might put them in your portfolio, or, see what's happening with the company. So if we look at Duke Energy here, we type in Duke and we pull up, you'll see that it automatically transfers over to the stocks tab. And likewise, if we just go to stocks, instead of doing a search for it, you'll see the different stocks, and you can see Tesla. Yeah, let's look at Tesla. It's not going to go in my dividend portfolio, but we'll look at it. So let's say we're looking at Tesla and we're looking at the news. Okay, well, the very first thing here that we'll see is we'll see their stock price, $655.29. It is currently down the day by $5. So the market cap, 636.3 billion in market cap. Market cap is basically how much the share price is times how many shares they've issued. That's the market cap. So the market cap, it's a large cap stock. It's the largest in the S&P, I believe. I don't think they trade on the NASDAQ. I'm not sure. But yeah, that's market cap. PE ratio. In my first video, I did mention that M1 Finance does not show technicals, and I wish they had PE ratios. But looking here, they do have a PE ratio, but they don't have other technicals. So the PE ratio is their profit versus profit and earning. Let me pull this up here and I'll show it to you. Let's go to Investopedia. If you're new to investing, or if you're an old hand at investing, and you're looking at research, the very first thing you will probably come across is a website called Investopedia, which is basically a Wikipedia for investing. So, PE ratio. So, here, let's take a look here. We're at Investopedia. Price to earnings, / or in quote brackets in I'm not an English major either. Leave me alone. Ratio by a Mr. Jason Fernando, and it was reviewed by Thomas Brock. I apologize if I mispronounce your names and you're watching this video. If you are, please give me a thumbs up, like, and subscribe. I would greatly appreciate it. Hint, hint. Table of contents. The price to earnings ratio is the ratio for valuing a company that measures its current share price relative to its per share earnings, or EPS. The price to earnings ratio is also sometimes known as the price multiple or the earnings multiple. They are used by investors and analysts to determine the relative value of a company's share in an apples-to-apples comparison, which is usually not the case. It can also be used to compare a company against its own historical record or to compare aggregate markets against one another or over time. PE may be estimated on a trailing, backward-looking, or forward projected basis. What does all this mean? It means that I'm going to say something very controversial, but if you listen to the explanation, it probably won't be as controversial. So the higher the PE ratio, the better the stock? Maybe? That is compared to other equivalent stocks. Other equivalent stocks. That does not mean that if you have a very good PE ratio, that it is a good stock. That's only in comparison to others. So with Tesla is the number one EV car manufacturer in the world. Some will probably say it is the number one car manufacturer in the world. They are also dabbling into virtual power plants, battery creation, automation, or not automation, well, AI, so it is automation, more or less, advanced form of automation, cars, vehicles, possibly VTOLs in the future, the list goes on and on. There's solar panels, etc., etc. So with that said, Tesla, as far as the stock market goes, is a car manufacturer. They are not an energy company. They are not a aerospace company. In the case of VTOL, which is a vertical takeoff and landing vehicle, they're not an energy company. They're not a battery company. They're not a tech stock. They are a car manufacturer. So this PE ratio of 572.1 is very high in comparison to other car manufacturers because of that aspect. They are in so many different markets and they make such high profit. They're such a high profit company that if you look into the future, Back to the Future. I am not a professional opera singer. Leave me alone. Pop singer. Whatever. I'm not a professional entertainer. Entertainment. I need some entertainment in my life. Anyways. Take this with a grain of salt. But use it when you're comparing companies that are equivalent. Tesla is not equivalent to GM. They're not equivalent to Ford. But according to the market, they are. The one thing you do want to look at, if you are an investor and not a trader or a speculator, miner, those Bitcoin miners, kids, get off my block or off my lawn. Get off my blockchain. Damn kids. Dividend yield 0.0%. Tesla does not pay a dividend. But anyways, also with M1 Finance, I do want to make that with an asterisk with the dividend yield. Sometimes that is not correct. They are using historical information. They are using a data provider. What does that mean? That means that even if the dividend yield is not correct, it is not the fault of M1 Finance. It is the fault of the data provider that M1 Finance is using. The reason why I wanted to go ahead and mention that, it seems a little bit complicated. Sort of kind of is, but if you look at my other series, the Let's Develop an AI Algorithm, that one is not completed yet, but I'm using a data provider to get all of my prices and things like that. So always double check, especially if you're looking at companies based on fundamentals and dividend yields. Just use, Seeking Alpha, Bloomberg, what's the one that starts with F? The brokerage, Fidelity. Yeah. Just check different providers, things like that, to make sure you have the most accurate information, because this is your money that you're using. So when you're using your money, then you need to make sure that you have all of the facts. But anyways, back to the research tab. So over in the right hand side, we have performance. We can look at the 1-day chart, and it's a very basic chart. All this is showing you is price movement, and you can see it's down $5. We can go to the 5-day. This is your weekly chart. So you can see even for the week they're down. Monthly chart, they're up for the month, 5.97%. 3 month, they're down. Wow, down. 1 year, they're up 100%. And you can see that 4-to-1 stock split that they did on August 30th. Yeah, that's August 30th. The 2-year and also the 5-year. Now, let's make this a little bit more interesting as far as the chart goes. Let's look at Verizon, because it also is a dividend stock. So if we look at Verizon, we can see it's fairly bleh. That's not really a good looking chart. But if we hover the mouse over to the D, D's are dividends, the S is the stock split, we can see if there's an M, we had a merger, didn't we? Activity, position changes, HY Hyliion. Oh yeah, because I didn't have a growth portfolio. Okay, HYLN, Hyliion. HYLN, Hyliion. Well, yeah, Hyliion was a SPAC. So in that SPAC, I don't remember what it was, but if you looked at the chart, there was another merger, wasn't there? It wasn't Hyliion. Activity, position. I'm trying to show you the most current information. Seagate, STX. Let's look at that. Seagate, STX. Okay, well, looks like I was wrong. So dividend, D is for dividend, S is for split. There is no M. You would think there would be, but if there was, I would say M is for merger, but there's not. So D is for dividend, S is for split. And we can see Seagate they increase their dividends. 65, 67, 67. Yeah, it's a dividend growth / income earner. It is a, trying to explain strategies here. Dividend growth strategy is based on the growth of the company and the growth of the dividend itself. Dividend income is, they'll usually have a flat, like a dividend king. Your dividend aristocrats, dividend kings, or are companies that have year over year paid out dividends and increased their dividends. They've never cut, and they've never not paid their dividends. That is kind of what my portfolio, as far as a dividend income portfolio, reflects. Are stocks that are in the Dividend Kings and Dividend Aristocrat lists. You can look those up on your own. But the Dividend Aristocrats are 50 years. Dividend Kings are 100 years, if I am not mistaken. But yeah, so dividend growth they may not necessarily be in those Dividend Aristocrat or King lists, but these are companies that, and you can see with Seagate, it is very much a dividend growth company. You can see the company typically grows in price and value, as well as their dividends. An dividend income earner, like let's say QYLD, this should be it's, what was that, 2018? So let's look at the 2-year. Pandemic, this was a black swan event. Normally this would be fairly flat. This would be typically a fairly flat chart. Now, if we look at between the recovery to now, you can see it's fairly flat. You see that? So, yeah, that's going to be your dividend earner. Those are companies that are their stock price are fairly consistent, and they consistently pay dividends, or they consistently increase their dividends as well. As if a company cuts their dividend, that means that something is going on behind the scenes with that company that you should be wary of, because dividends are not guaranteed to you as an investor. They are voluntarily given out by the company, but if that company needs to use that cash somewhere else, that's the first place that they're going to look for, is the dividend. And I want to bring up this is actually a good company if you're into technology. They were, back in 2019, they were paying a semi-annual dividend. So between 2019 and 2020, Disney was being put into dividend portfolios, because Disney as a whole is fairly consistent. They're having like an uptick because of their Disney Plus platform. But then the pandemic hit. When the pandemic hit, what was the first thing that Disney did? Actually, a lot of companies, other than Disney, they cut their dividend. Me personally, the pandemic was for the stock market, the pandemic was a black swan event across the market. Just like it wasn't a bubble. Bubbles like the housing bubble, the internet bubble, the inflation bubble, blah, blah, blah. Those are they were predictable events. A black swan event is something that is not predictable. The pandemic was not predictable for the stock market. So you can see a huge drop. This is going to look, pretty much every single company is going to have this drop. But not every company cut their dividend. Disney did. So the first thing I looked at was, research. Why did they cut their dividend? The reason being is the majority of their profit was coming from the Parks and Recreation part of Disney. So they cut their dividend, blah, blah. That's not bad. The pandemic's going to end. So through this time, I actually held on to Disney. I don't see a problem with a company cutting or not paying their dividend after a black swan event. It is what it is. I'll hold on to it until the market corrects and everything goes back to normal as far as the market is concerned, which happened right around November to January of 2020 to 2021. But they still did not start paying a dividend. And the reason why was because they're setting up their Disney Plus through acquisitions and things like that, so they need the cash. That's fine and dandy. But they're not a part of my portfolio anymore because they're not paying a dividend. I am a dividend investor. So, it is what it is. But you can get access to that information through these charts. Are they growing their dividend? Did they cut their dividend? Did they skip a dividend? Other than that, if we scroll down, and that was a long talk. Long talks require a hot coffee, right? Yummy. Profile. This is basically your profile of the company. If you run across a random company, I was going to type random. So, Ingersoll Rand Inc. IR. Yeah, they also stopped paying a dividend. 40 cents, 45 cents, 53. This actually looks pretty decent as far as the dividend, but they haven't reinstated it. So what are they? Obviously it's a stock. If it was an ETF, it would say fund here. Looks like they're involved in the manufacturing of air and gas compressors. Driven by an entrepreneurial spirit and ownership mindset. They're dedicated to helping make life better for employees, customers, and communities. Customers lean on blah, 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 technology-driven excellence and mission-critical flow. Industrial solutions, 40-plus respected brands, whereas products, services excel. Complex and harsh conditions. Mars? Maybe? The moon, Luna, or Mars? Okay. So, their CEO is a Vicente Renal with 6,700 employees. They trade on the NYSE. They're margin eligible with a 25% maintenance requirements. So if we scroll down, this is basic corporate information. So obviously this right here was written by their PR team. These are just some basic stats. The latest news. Zacks Investment Research possesses the right combination. Should you grow or should you buy? Yeah. So, but anyways, you can kind of see what I just did there. You click on it. The latest news is an aggregation of sources, such as Zacks, MarketWatch, Millennial Money, Business Wire, not the YouTube channel, Millennial Money, but the magazine, the news source, Millennial Money. They also like CNBC, Fox Business, MSNBC, you see what I'm getting at. It's just an aggregation of news. But yeah, you just go through the news here, especially if you're an investor, and kind of, is this company the right fit for my portfolio? For me, it doesn't look like it in either one of my portfolios. One, they're no longer a dividend company, and two, they're not a. My growth portfolio is very much a futuristic portfolio with technological innovation and climate change, blah blah blah. But this particular company does not fit in that portfolio as far as the theme goes. With that said, though, their chart does look pretty okay-ish. They've had their ups and downs. Yeah. So that is the research tab as far as stocks. Funds are going to be the exact same thing, but with funds instead. So if we look at ARCX, that's the space exploration and innovation. They don't have a whole lot of information because of this one. Let's look at ARC. There we go. Alright, this one, in the ARCX one, you saw that it didn't have a whole lot of information. That's because that is a fairly new ETF. With ARCK, that's they've been around for a little while, so their information has populated. If you are an investor, you can request a prospectus, or even if you haven't invested in that ETF yet, you can still request a prospectus to your email. That's information that a fund is required to give to investors. It tells you what their holdings are, what they're doing, how they're viewing it, etc. It's just research information. But for their, unlike stocks, they also show like their allocations down here. With this particular fund, they have 86.8% into U.S. stocks, 12.91 are non-U.S. stocks, and they hold on to about 0.29% into their cash balance. Unlike me, I have a 0% cash. Their top holdings, Tesla and Roku. I don't have Roku. My you can also look into your pies, my pies, the American pies, the world pie. Everything is a pie, the apple pie. So, hey, I want to do some research, but I forget what I had in energy. Okay, so energy, and this is my particular pie here. We see that this particular pie and the companies that I have in it over the 1, 3, and 5 year, that's a horrible percentage for these companies. 6 companies have a 5.82% dividend yield. It's a good yield, but look at this performance. It's just dropping. Expense ratio 0% because there's no funds or ETFs. We can see where it's located. Dividend portfolio and energy. So, now, I'm not going to get too much into the reasons why I chose these just yet. That'll be in a separate series where I want to go ahead and go into my various holdings and positions, my strategies, things like that. But before you judge on this particular series, there is a reason why I think these charts are not correct. Now let me first show you one little thing here. We look at the 5 year, the 3 year, the 1 year, the quarter. You see how it never changed between all of these? That is because of this stock right here changed the name of their ticker on June 10th. So it's only going to go back to when the stock was IPO'd or when something changed to that underlying holding. But for the quarter, it's down 8%. For the month, it's down 6%. For the week, down 3.72%. But yeah, you can see the slices, the allocations. You can click on one of these, like Enbridge, and it'll take you to the stocks research, so you can look at the latest news. And yeah, so boom. That's the My Pies. Expert Pies, we went through this a little bit. Yeah, just goes through, shows you the watch lists. I'm actually surprised I have anything in here. I have hardly ever used it. This may have been when I was first starting. But when you look at a stock, like Tesla, you can say watch. And then you could go through here and see PE ratios, these, etc., changes, market caps, and just goes through a loop, loops everything through. But yeah, that is the end to this video. I hope you have learned something. One quick thing that I did not go over is when you're looking for stocks, you can do market capitalization. I'm going to edit that. That's fine. If it's a small cap, large cap, I already explained the market cap being the price per share times how many shares they have. You can see PE ratios, dividend yield percentages. Let's say you want... There are no stocks with a 25% dividend yield. 15, 14. All right, so we have two things that give us a 14% dividend yield. Both are fairly low, medium cap. What is this? Orchard Island Capital? It's a REIT. Okay, so that's the reason for their high dividend yield, is because it's a REIT. 50% maintenance requirement because it's a looks like a small or a mid cap stock. Yields. Let's look at their 1 year dividend. 6 cents. 777. Looks like it's fairly consistent on the 1 year. 8 cents. 6. Ooh, looks like they had a dividend cut back in 2019. And that's 2020. So yeah, that was the market, the pandemic. So they cut their dividend by 2 cents. It's not bad, actually. And then they're slowly raising it. I would like to see I'll watch that. I will watch that. As far as a REIT, I would like to see them come back up to their pre-pandemic levels. SEC, Holly. Yeah, I'll do some more research on that. Who knows? But yeah, you can kind of see what I'm going through. We can also look at different sectors. Like let's say if I'm looking for a mining company, mining quarries or oil, you can select your different market sectors. For example, a week ago I was looking at, because of the entire inflation thing, I was looking at agriculture and water instead of oil and gold. So if we look agriculture, we can look at it'll pull up a list of all the agriculture stocks and funds and things like that. So it's the same thing sorry, I said stocks and funds. It's that over on the stocks tab, it's stocks only when you search by sector. But in the funds, you can search, by different categories. So if we look at industries, subcategories, communications, technology, etc. But that is kind of like how you go through and you search for various stocks that you want to invest in. Now, this will be a subject of a later video, but my particular portfolio is I only invest in stocks that I know beforehand and that I've researched, that I've looked at, or stocks with companies that I use consistently. For example, LG or Samsung, Intel, Microsoft. I use Microsoft Windows, so I should invest in Microsoft. Amazon. I have an Amazon ALEXA. Don't need her to start on the video. But hey, I might want to invest in that company. So Amazon, things like that, So invest in what you know. Don't invest. And this is my advice coming from not a financial advisor, but just as somebody that has a hobby that is financial in nature. Only invest in what you know and what you use, because if you use something or if you know something, there's going to be a good percentage chance that somebody else, 2 people, 1,000,000 people might use the same thing. So, and if you use it consistently, then those people might be using it consistently. You see kind of like where I'm going? Yeah. That is my not financial advice for the day. But anyways, I'll go ahead and I'll end the video here. I just want to say thank you for watching. This was a fairly longer video. I didn't mean for it to be this long, but thanks for watching. It doesn't look like we have that much to go over in the next video. The next video, we'll go ahead and end the series on the next video, because that'll just cover rebalancing that I'm not going to do, and any other miscellaneous information. Thanks for watching this longer video, and you guys have an excellent, fantastic day. Peace out. See you in the next.